Hello traders, this is Blake Morrow with Forex Analytics and you're listening to the week ahead video for June 11th, 2023. I hope you all are having a great weekend. Next week is probably going to be one of the bigger weeks of the markets. It's a week that a lot of people are waiting to pass so they can take vacations, go on their summer holidays here in the US and Europe and around the world. The reason why it's going to be such a big week next week is we have central bank meetings not only from the ECB, the BOJ, also the FOMC. And these are all going to be scrutinized. And I'm going to give you my best setups of the week. I'm going to share with you what I'm looking at, what I think is going to matter when you're looking at these central bank meetings. So make sure you all stick around for that. Also, the PBOC, I believe on Thursday morning, they're going to be talking about releasing their 1 year midterm MLF announcement. It's like their midterm lending announcement. It's a little bit different from the lending rates that they have for their interest rates, but it is something that I think the market's going to be looking at come Thursday. We have to keep in mind the Chinese economy has not been as explosive, in the reopening as a lot of people have believed. We've seen it in Chinese markets, we've seen it in the Australian dollar, we've seen it in copper. We've had a bounce back over the last week or two, which we'll talk about. But a lot of people were wondering if the PBOC, the People's Bank of China, is going to make a few tweaks to their policy rate to help their economy along. So, with that being said, let's get into the markets. And if I haven't mentioned it already, let me make sure I mention it. If you haven't checked out Forex Analytics, make sure you do so. There's a lot of great tools in here. We've got live charts that you can see right here. You also have our analysis for all these different instruments. We have 30 different instruments, $1 for 10 days. Try it out. We have a lot of tools like risk management tool, which I use all the time. I even use it when I'm on air with you guys. Which we do have free broadcasts, we have live squawk feeds, lots of different tools, and obviously our chat room, and I'll talk about that a little bit later. But I'm gonna actually not use the live charts here. I'm actually gonna use our charts that we mark up each and every week right here. Now let's talk a little bit about something else before I get into like what's happening in this week. I want to talk about the daily sentiment index. The daily sentiment index is the DSI, as a lot of people know, is something that we subscribe to as a company, and it's something that I watch not all the time, but when we get to extremes in sentiment, I start paying attention, because it's kind of like that old the old analogy when you have a boat and everybody's like on one side of the boat, whether it's the starboard side or whatever side of the boat they're on, and you get everybody on one side and the boat tips over. That's the same thing with sentiment. When you get too many bulls, or everybody's too bullish or everybody's too bearish, you start to get that contrarian potential reversal. So right now, if you look at things like the Japanese yen, the DSI is 14. It's not as bearish as it can be, but it's pretty damn bearish, and that means that most people are expecting the yen to continue to weaken, and we're going to talk about the yen in extensively here in a minute. But when that happens, I start to get a little bit more skeptical and thinking that we might go the other direction. Now, obviously, there's so much happening this week, especially with the FOMC and the BOJ, that we're going to talk about that obviously here in a minute. Now, a couple other things that are really nagging at me right now. The VIX volatility, or VIX, DSI, is at 9. That means it's a single digit. That means there are, very, very few bulls. And when that happens, and you can see clearly we're at lows and we're at, a lot of support down here. When you get to these types of levels, the risk is that we get a volatility squeeze, or an event like this week where volatility can pick up. Is there anything happening this week that could pick up volatility? Yeah, the ECB, the Fed, the BOJ, the PBOC. There's other events that are happening this week too. Other things, economic data that's being released that could cause these types of events too. But VIX DSI is extreme. Also, the Nasdaq and S&P, and the Nasdaq is almost about as extreme as they come, and as a result, and let me pull up the Nasdaq100 really quick for you. Well, here's the Nasdaq Composite, or actually that wasn't the Composite. Here's the Nasdaq100. We're reaching, obviously for some pretty key levels of resistance here. They're levels we haven't seen since, this is like the highs of the year. We're at a long-term 618 retracement, kind of fluttering around here. When DSI is this extreme, you have to be on the lookout for possible reversals. Like I said, there are things that are happening this week that could actually fuel that. Now, what I'm going to do is I'm going to go through some of the things that are happening this week, and we're going to talk about the key components to them. So, first of all, on Tuesday, I think Tuesday we've got to pay attention to the UK, job claims, the claimant count change, and that, I haven't looked at the cable a lot. I will tell you this, and I'm going to delete these lines. We're going to start from scratch here with the cable. The one thing I have to point out about the cable is the pullbacks have been very shallow. Now, the reason why that's a big deal is because if we do get some dollar weakness, this week, the cable is going to be one of my top selections on trades that potential trades I want to take. When you look at the euro sterling is just absolutely getting clobbered right now. And as a result, we are at really critical levels of support, and we start breaking through, these levels. Where's the euro sterling going? It's probably going down to 85, 84 pence. If that happens, that's just going to lift that cable higher. And so I have to say, pullbacks have been shallow. Now, if you are a harmonics person, which some of you are, you've got to be obviously looking at something like this, and I'm just going to draw it out for you, which does garner my attention. Okay, this is just so you all know, that's a Gartley pattern. Now, if a Gartley pattern turns into a butterfly, it could look something like this on a breakout to the upside. So, with that being said, keep your eye on the cable. I'm gonna come back to this chart a little bit later, so don't go anywhere. We have German ZEW data that's going to be a market mover for the euro as we go through the week. Now that is going to come out on Tuesday. Also, the big data I think on Tuesday is going to be the US CPI. Now I want to talk a little bit about the dollar index and where we're at. So the dollar index is at what I would consider pretty critical support. Let's go ahead and delete this really quick. I'm going to delete this line on RSI, and I'm going to continue to draw out this bull flag pattern. Now, I think it's dangerous to be bearish to the dollar just yet, because we are building a bull flag pattern. Now, you'll notice if you go from the lows to the highs right here, we are coming really close to the 38% retracement. Probably the level, if I was long dollars, which I happen to have a few long dollars in my what I have my open positions on right now. I have a couple US dollar longs. I don't want to see them drop below 102.30 right here. It's a 50% retracement. It's a little bit of a breakout point, and it'd probably be below the flag low. Now, if we got below that flag low, that would actually trigger some selling from dollar traders, but also it might bring in some fresh new dollar shorts. Now, if you think about the data that's coming out on Tuesday with the US CPI, it is before the Fed, and also the producer prices, which will be on Wednesday, that's going to come in before the Fed as well. That data is going to be scrutinized a little bit because most people feel that we have some pretty strong disinflationary pressures coming through, not only the US, but also different pockets of the world. And, when you've got year over year CPI expected to come in at 4.1%, if we come in at like a 3.9 or even a 4% year over year on the headline number, and I'm not even talking about core, but I'm talking about the headline number, we could really see the dollar come under pressure because people would anticipate that the Fed is going to stay on hold. Now, I do think that, by the way, we can just kind of go into Wednesday. I do think that the Fed will stay on hold, but I talked to a lot of experts in the industry, and I happen to interview them. I'm happen to be pretty good friends with a lot of them, and most people believe that we're going to get a pause or a skip, and then potentially, the risk is resuming hikes sometime later this year, if needed. And if you notice that the RBA and the Bank of Canada, they both actually raised rates and resumed raising rates. Could the Fed possibly raise rates right now if they feel that they need to? And that's why that inflation data, not only on Tuesday but also on Wednesday, the producer prices, is going to be factored in. I think if that data does come in strong, and you see a real sticky inflation numbers, that's going to get people thinking that the Fed could indeed raise rates one more time on Wednesday before they pause. And if that happened, I believe it's a coin toss right now. So if that happened, you might see some dollar buying come in. So what I'm trying to tell you is CPI data and the dollar index is going to, and producer prices as well, could move the needle in the dollar ahead of the Fed. And I think we need to keep an eye on this bullish setup that you see here in the dollar index. Now, let's talk a little bit about the FOMC. I mean, I've talked a little bit about it now, but I want to talk about what are the best setups if we have a strong US dollar reaction, a bullish reaction, or a bearish reaction. Now, before I even get into other dollar pairs that I think are key, I want to talk a little bit about gold. And I know I mentioned it just a bit ago, but let's go ahead and talk a little bit more about gold. And let me delete a few things. And I'm going to keep that fib level right there. I think that one might be important, but I want to look at something else that I think everybody should be viewing right now. All right, so this is gold. We all know that they're major all-time highs right around here. It's obviously influencing. People are a little hesitant buying gold at this point because we are at that triple top or near these all-time highs. You don't want to really be bearish, but at the same time you don't want to be bullish, and I get it. What I'm really looking at, and I know if you listen to our daily shows, the face show, the flow show, which if you don't log into those and you don't listen in, you got to listen in because it's not just myself, it's the rest of the team. There's a flow show, and you can find it right at forexanalytics.com. This is the European show with Ryan, Stelios, K-Man. The face show, you're going to get myself, Ryan, K-Man, and Stelios briefing us of what happened in Europe. Then you're going to get myself and Steve and Dale. Grega will pop in. We get other experts that come in there. So make sure you are listening to those. I'm going to go back to the charts really quick, and I want to share with you on gold. One thing that we're looking at is we're looking at this really key. Do you see that trend line right there? That's going to be really critical, right? And if you notice this right around this support, it's around 1930, right through here. You can see a lot of spike highs, right? Spike lows. You can see it's very key. Now, if we break that support, we have this other trend line that comes in around 1920. That's also going to be critical. Now, the reason why I want you guys to see this is because you have 1985, which is right up here, and do you see what's right at the same price? The 50 DMA. So you got the 50 DMA, 1985, or 1985, 1990, roughly, right here. Okay, and you have this support right there, and you notice what that is, right? That's like a 2-week, very tight trading range. My assumption is, based on what happens this week, we are going to break out of this trading range, and it's going to be a big one too. Because if you're a dollar bull, where do you give up? I mean, realistically, if you're a dollar bull and you're like, okay, I've been hanging around buying, or did I say dollar? I meant gold. If I'm a gold bull, I've been hanging around for the last month and a half, and I've bought it, and I know we're right against the highs. Where do I want out? You got to think about it from that point of view. If I'm a bull, I probably want out somewhere down here below 1930. But if I'm a bull and I'm like, okay, or if I'm a bear and I think gold's going down, where are you wrong? You're wrong right above 1985. Or if you're a bull and you want to be adding to your positions, you're going to be doing above 1985 or maybe the 50 DMA. So the reason why I'm pointing this out is because the gold market will probably give you some clues into what the dollar's doing, because gold and the dollar have very strong inverse relationship right now, and also gold and yields are following in a very similar path as well. So keep your eye on gold, because I think gold's going to tell you a lot about whether a breakout or a breakdown in the dollar can be sustained or not. So that's what I'm going to be looking at, is the gold market. Now, what am I going to do, or what are we going to do if the dollar is bullish? Well, you notice I just took you over to the euro, and I'm going to remove all of these drawings. I know. That's a lot of drawings that I just removed, but that's all right. A lot of times you got to start fresh, right? Now, what you're going to notice here, if you took these highs, which remember, there is a lot of euro bulls just a few weeks ago, and you go to this low right here, what you're going to notice is we've got a nice little bear flag pattern. Do you guys see it? Well, if you don't, I'm going to draw it out for you, so no worries. You're all good. So I'm trying to clone that. Let me just do it. It's okay. Here we go. Right. Okay. Do this. Right. Okay. If there's a bullish reaction, because people feel that the Fed is going to be more hawkish, what better option right now? Now I've got a few, so whoops, I didn't want to do that. I got a few, so don't go anywhere. So what better option than something that's already set up in a bear flag pattern, right? You have a bear flag pattern. We can't even get above the 38% retracement. If we get the gold starts to break down, the dollar starts to rally, well, the euro dollar looks prime for a sell-off. Now, if we made it back down to 103, 104, and we're below the 200-day moving average in the euro, I think that you're going to find some buyers down there, of course, because if you take a longer term look, that you're nearing the 50% retracement of this entire move. You're going to find buyers down on those levels. You're going to find people that are looking for value, and they're like, well, I think the euro is going to 120 over the course of 2023 and 2024, so I'm willing to be a buyer down here. You're going to find buyers down there, but is it possible we get down there with a strong dollar reaction? Absolutely. The other one I'm looking at the US dollar Japanese yen. The reason why the US dollar Japanese yen were above 138, and we're in a bullish, we're in a tight triangle consolidation above 138. You can see it right here, right? So as long as we continue to hold above 138, that target of 142.50 does not seem unreasonable, and that's something that we've talked a lot about. Now remember, we do have the Bank of Japan this week, so that's something else that you have to factor in as you go into Thursday night, Friday morning. Thursday night, if you're here in North America, you got to think about that, okay? And then also, we were just talking about the euro. Remember, you have the ECB on Thursday morning. You have the ECB, and by the way, the rate decision is 15 minutes ahead of the U.S. data that moved the market this week. Was the data that moved the market? What was the data that moved the market on Thursday this week? The weak unemployment claims. So we got unemployment claims. We got retail sales out of the U.S. We have the ECB decision 15 minutes before that data. The press conference is just after all that data comes out, like another 30 minutes later. So the euro is going to, again, a lot of moving parts, right? Same with the euro, same with the dollar yen. Now, a little bit less moving parts, as I was talking about the dollar yen, a little bit less is for moving parts is the dollar Canadian. Now, we talked about the dollar Canadian, very critical support down here. That 133 level is key. You can see this tight consolidation. This consolidation, by the way, has been going on a long time, since literally October of last year. We've got like 9 months of a consolidation. Now, I don't call that a bearish consolidation, mind you. Last I looked, this chart goes from lower left, where we bottomed out, to upper right. That's a bullish, trend, and we're consolidating at the upper end of that trend. So that's a bullish consolidation. Does that mean that we can't turn lower? No, it doesn't mean that. But you know what it does mean is if we get a bullish reaction from the dollar on, or post FOMC, could we get a nice reaction from this 133 level? Maybe even below that after it shakes a few people out at 132.80? Absolutely. So keep your eye on the dollar Canadian as you're near these range supports. I had a great conversation with Mark Chandler of Bannockburn Forex last week. If you haven't seen that interview, You can go to Trader Summit right here, and it's what's in play for the next week. Mark talks about the dollar CAD quite a bit. What's happening in Canada with the forest fires seasonally? They're happening a little bit earlier. Talks about their GDP. It's worth a listen, especially if you're interested in the dollar Canadian. By the way, listening to Mark Chandler should always be on your list of things to do, especially in the mornings. Whenever you get up in front of your computer and do a little bit of research, probably one of the best FX guys out there. And he's been I could call him a mentor of mine, because literally when I started trading currencies in 2001, after I stopped trading equities so much, first person I used to read on all of his blogs and his book was Mark Chandler. So super knowledgeable, ex Brown Brothers gentleman. All right, so I'm going to continue on. That we talked about. How about if the dollar is bullish? How about the dollar is bearish? How about if we see some, people start to expect that the Fed is going to, not only not hike rates any longer, but maybe we are closer to actually cutting rates. The Fed is. Well, that's when you start looking at, again, the dollar yen, because yes, the dollar yen is above 138. Yes, it's still in a bullish consolidation. But what happens if we break through support? What happens if we break through 138 right here? Well, I think that's going to be a very bearish breakdown. 200-day moving average, not far away. So you got the dollar yen that you could possibly play. Now, remember, you do have the BOJ on Friday. And by the way, based on the commentary that we saw just like at the end of last week, if you're in the chat rooms and you look in the news and research room, you'll see some of the comments from UEDA that came out like on Thursday night, Friday morning. And that really suggests, that the BOJ is not ready to tweak yield curve control yet. So, that shouldn't affect the dollar yen bearishly, but the dollar could. So, and how about if the BOJ throws a monkey wrench in all of our plans? So we'll see. So we got the dollar yen that is a setup for a dollar bearish move, and also the dollar Canadian, because what if this actually breaks down? A lot of times the dollar Canadian is called the canary in the coal mine for a reason too. I mean, if we start breaking down through here, you're talking about targets below, because we are trading below the 200-day moving average, 50 DMA. Some of you death cross people will say, "Oh, Blake, that's a death cross." Right there, it's a death cross. You see the death cross, 50 DMA cross to the 200 DMA. Yeah, so it is. If it's a death cross, maybe it's going to play out to the downside. Well, if it does, we could see a pretty severe breakdown. And there's in the dollar Canadian, there's no real Canadian news that we need to pay attention to. But the other one, again, I'm going to go back to the sterling, because man, this thing has been strong. Now, I haven't been able to, and I know if you guys or gals live in the UK, you're probably like, I don't know why the cable's been so strong either, but it has been. Isn't that the fact? The fact is, and let me get rid of this harmonic pattern here again. The fact of the matter is the cable has been strong and it's holding up well. It's holding up well against the crosses. If you look at the euro sterling, it's breaking down. You look at the pound Aussie, pound Kiwi. I mean, those look pretty, pretty steady Eddie higher. And you got the sterling that, if you get some dollar weakness, is it possible that we push stops above, 127? I mean, I think it is. So the fact of the matter is we are, the risk is that we could get a move higher. And that's if the dollar starts to weaken, that's possible. All right, now I'm going to stop really quick. And I want to say that, looking at the Fed, looking at the FOMC, that's going to be the big mover of next week. Now, we also have other things coming out. We have we have the ECB meeting, so obviously the euro is going to be in focus. We have the Bank of Japan meeting, but some of the other things that we should be looking at as well is we should be looking at what's happening in equities, because you got the S&P, and I got to point out, and I know we've talked a lot about this, but not only here on the week ahead video, but everybody's talking about the S&P and how bullish it is. Look, it's not bearish. And we're in a bullish breakout. And we are at very critical resistance. If you don't know that critical resistance, let me just map it out for you again. There's the all-time highs, right? Here's the lows that we put last year. See it? High, low. Here's the 618. Also matches up with, the 127% extension of this move. We talked all about this last week. We talked about the bullish breakout, right? Now, I'm going to delete that just to get rid of lines, but you can see we're at a really pretty key confluence. And the market is chasing. There is FOMO in the air. Fear of missing out, the fear of underperformance if you're an asset manager, and we just came out of a period that should be, a seasonally, we're going into a period that should be seasonally weak, but just because it should be seasonally weak doesn't mean it will be. So, you got to really hand it to the stock market right now that it is in a bullish breakout. And I believe while we're still above 4,200, you have to take that into consideration. If you look at some of these intraday charts, and I'm going to just draw this out for you. This is, just so you all know, this is what we call a bull flag pattern, right? And we're breaking out to the upside, and we stalled right at resistance on Friday, as you all know. But I'm going to go ahead and say that bull flag pattern points us towards 4,400. So, can we make it up to 4,400 and 4,450? Yeah. And you got to ask what ifs, and if that happens, what else happens to the market? I mean, you look at currencies like the Aussie dollar. By the way, the Aussie dollar's had a hell of a bounce from in between fib levels. We bounced pretty aggressively. Copper's kind of stalling right at the 200-day moving average, but the Aussie's probably in a prime level to be on the short side again. But if equities continue to rally, the Aussie could continue to bounce as well. We also, just so you all know, on Wednesday night, if you're in the United States, but it's actually Thursday morning in Australia, we do have Australian employment. We have China industrial production and retail sales, and we also, out of New Zealand, we have GDP data. So there might be some activity there, but I guess the point I'm trying to make is if stocks continue to rally, the Aussie may continue to rally with it. Okay. If stocks turn lower, the Aussie will probably turn lower again as well. You'd notice we're struggling, and I mean, we've struggled in recent months around this 200-day moving average. You can see it's the red line right there. So we're above it right now, and every time we get above it, it just gets smacked right back down again. That's happened over the last several months. So, before you get too bullish at these levels, just realize that, and realize that the copper is kind of stalling at the 200-day moving average, which I think is a big deal. Now, going back to risk, and going back to what I was saying about the S&P. So yeah, you got to ask the questions: what if? Can stocks go up there? And if stocks go up there, what happens with yields? What happens with other markets? You got the Nasdaq that continues to blast higher. Could we continue higher towards this 78% retracement up at 15,400? Sure. I mean, you look at what's happening in other markets like the DAX. I mean, we're in an ascending wedge. We're holding really, really well. How about the German DAX? Could we see all-time highs? Why not? Right? So ask the questions. Why not? Now, I think, going back to what I was saying a little bit earlier about the daily sentiment index, there are some extremes that we really have to pay attention to. But that doesn't mean that, being extreme right now can't be more extreme. Being overbought can't become more overboughter and get more overboughterness. Yes, I am making up those words. Yes, feel free to use them if you want to. So anyway, with that being said, one of the best ways to take advantage of next week's volatility is to check out the Trader Funding Program. If you haven't checked out the Trader Funding Program, you want to learn how to trade our money and not risk your own money. Hey, the best time to do it is when there's some volatility. We have laxed the rules. All you have to do is make a 10% return without risking more than 6% on a trailing basis. If you want to watch a video on how I did it, click the link down below and you can learn that. And make sure you check out the trader funding program. It's a good way for you to be able to access larger amounts of capital if you'd never had it available to you. Why wouldn't you? You know, when I was younger, you know, one of the benefits that I had, especially when I was, you know, in 1996, when I first started trading for somebody, I started trading with a lot of capital. I was fortunate. A lot of people are not that fortunate. But how about if you have that opportunity? Well, this might be your opportunity. So check it out. Check out the Trader Funding Program. See how Nick passed his assessment. You know, click down the link below to check out how I passed the assessment. And with that being said, I want to say, you know, good luck next week. It's going to be a busy one. And really, if you want to be with us every single day for free, jump in the Flow Show, which is the European show, if you're up during European hours. I love listening to the guys from the Flow Show on the Face Show, which is just a couple hours later, because they get to brief us in North America what happened overnight in Europe. And that is a huge benefit for traders, getting caught up as quickly as possible. That's why, you know, going through our chat rooms, going through the news and research room, seeing what's been posted overnight, going to the S&P and indices room, seeing what other traders are looking at when you're talking about the German DAX or whatever you are, and being in the trades room and seeing what people are buying and selling throughout the course of the day, that's huge too. So with that being said, guys, gals, I want to say have a great one. Thank you so much for being with me. If you like this video and you feel it's going to be helpful for you next week, click down below, give me a thumbs up, give our team a thumbs up. Give me some comments too if I missed something, because I may have missed. Did I say MILF? No, MLF, not midterm lending facility, not MILF. So if I say something that doesn't really make sense to you, jump in the comments below. Okay, that was a funny one. Come on, that was funny. All right. You guys and gals, thank you so much for spending your time with me. I'll talk to you soon. Bye-bye. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.